Hey everyone, thanks so much for the warm introduction. It's really my pleasure to kind of introduce this topic and the next panel, which is going to focus in on some of the legal and regulatory challenges currently facing blockchain technology. But really, to start off and to take a step back and take a step up, I wanted to just explain why blockchains are creating so many legal challenges and also how regulators are likely going to approach this, kind of thinking about this space going forward. And fundamentally, the reason I think you're hearing so much about blockchains and kind of cutting through a lot of the hype and noise that you may have heard about over the past couple days or the past weeks and months is that blockchains are really a novel data structure. And fundamentally, they enable folks to coordinate social and economic activity, even though they're located all across the globe. And they enable folks to do that with less of a need for a central intermediary. And this is pretty profound, right? Blockchains are tamper-resistant data structures. They're networked, but they enable folks to reach consensus, to reach a common state, a common point in time, depending on the blockchain-based network that you're a part of. And because of these characteristics, we've seen quite a bit about new digital assets that are being formed. Bitcoin, Ethereum, Ripple, they're all using a blockchain as kind of this backstop in order to keep track of who owns what at what point in time. And that's really, really interesting, and that's really profound. But I think the bigger picture and what we're really thinking about and talking about here is an analogy to the internet. When the internet really was born, it helped turn communications and other ways of communicating with one another into information. Information that could get zipped across the globe. And when we did that, we were able to effectively turn all this information into email. With blockchains, we're doing the same thing, but this time with assets, using a related technology called a smart contract. Smart contracts are really important technology. They help us define the metes and bounds of these digital assets, rights, obligations, and the way that these assets can be owned and transferred. And because of that, and this is critical, we now have the ability to implement in the digital world something that's akin to property rights. We didn't have property rights online before the birth of blockchain technology, before the implementation of smart contracts, and now we have that. And lots of the problems that we see online are in part due to the fact that there is no property rights regime. And blockchains enable us to do that, and enable us to do that in a way that is not necessarily tied to one central government. Increasingly, the rules related to these assets are being defined by these blockchain-based networks and by the code itself. So instead of only having to grapple with the rule of law at this point in time, we also are increasingly going to have to grapple with the rule of code. And smart contracts open up brand new plateaus and abilities to explore scarce digital assets, what they mean and how they can change business models, how they can be used natively to be bought, sold, or trade, and maybe power financial systems in and of themselves. But also critically, and this is interesting in what's emerging, we're also seeing the ability of these smart contracts and blockchain-based assets to transform the way that we enter into legal agreements. So instead of having legal agreements that are simply written in natural language, in English, in French, or some other language, portions of these legal agreements are increasingly being written in software. And that's really, really difficult for regulators and other folks to grapple with. And so what's emerging, at least in my opinion, is this stack. And people tend to focus in on the bottom layer of this stack, this blockchain, which can be used to mint and create and keep track of assets. But what we're seeing is that certain core functions that have literally existed since the dawn of civilization are beginning to get repurposed for a blockchain-based era. So we're looking at services that are either centralized or decentralized that are beginning to think about how do we keep these assets safe, how do we custody them. We've seen lots of innovation around marketplaces. How do we create places where people can buy, sell, and trade these assets? What's coming is also these other new functions, which we've had since the beginning of commercial relationships, which is how do we manage risk related to these assets? How do we make sure that we can account for all the various different things that are necessary to trade an asset? And how do we prove that I'm the owner of an asset and that you're the intended recipient? That's what these identity and attestation systems are trying to do. And for the first time in literally 2 centuries plus, we have the ability to reimagine this commercial stack, something that we've taken for granted, but now we can think about how to build it in an interoperable way, in a global way, in a way that can scale and hopefully reduce costs and some of the issues that we see today. But as these blockchain-based systems are expanding and as they're growing, they're creating new legal challenges. And in part, they're creating these legal challenges because, one, fundamentally, these blockchain-based networks are synonymous. You don't necessarily need to identify yourself in order to interact with these systems. That's very different than the current banking system, where you need to have know your customer or other compliance checks put in place. And the second thing is that blockchains do thin the need for certain intermediaries. You can perform core financial and increasingly social functions without having a center at the middle. And this is important because law tends to attach onto the nearest intermediary. If you are an intermediary that's facilitating some sort of social or economic activity, the laws are going to attach to you. But even though blockchains thin the need for intermediaries, they haven't eliminated them completely. And what we're seeing is that regulators are focusing in on these intermediaries in order to begin to tame some of the tendencies of these blockchain-based networks. And the headline here is that blockchains have been subject to regulation, and they're going to increasingly be subject to regulation because of this intermediation. And shots have been fired over the past 2 years by regulators, and they've focused squarely on intermediaries and parties that are involved with the blockchain-based networks. And these are sometimes old intermediaries, but also new intermediaries. So we're seeing in the crosshairs new digital asset exchanges, whether they're centralized or decentralized. Miners and validators are the parties that support these networks. They're a lot like ISPs. We also see sellers and promoters of digital assets, and even potentially software developers. But the headline, again, here is that this is not all bad. Legal guardrails may be viewed as chains by some of the entrepreneurs here, but ultimately they will bring this marketplace to the mainstream. So with that, I want to thank you and introduce the rest of the panel.
Hello again, everyone. I want to get right into it. This Facebook news is on sort of my beat, the biggest thing that's happened in a long time. And I think a lot of us are very curious what's going to happen to Facebook. Will they be able to pull this off from a regulatory point of view? And luckily, we've got Tim Assad. You ran the CFTC. You're a longtime DC guy. You know, you can probably make some predictions. So can you tell us what's going to happen to Facebook?
Well, look, we've already seen a reaction from members of Congress, and it's not just Democratic stalwarts, it's on both sides of the aisle. Patrick McHenry, a Republican, also wanting to know more about this. And it's even a reaction from the chairman of the Federal Reserve saying they've got an interest. And that's quite a swing. It was less than a year ago that Chairman Powell, in his testimony before Congress, said Federal Reserve does not have any jurisdiction over cryptocurrencies. We only regulate banks. So I think we're going to see, a lot of interest there. Now, they've structured this in a way that does deal with some of the regulatory issues that have become very common in this industry. They've separated Libra, the cryptocurrency, from the investment token. So if you own Libra, you don't get an investment interest. You're not, part of the common enterprise, that sort of thing. But there are other issues that they may face. I assume they've thought about some that'll hit them right out of the box if they launch it, which are, is it property like Bitcoin? And that'll be up to regulators to decide, because that means, at least in the US, is every transaction a potential tax event, a potential matter of gain or loss recognition. How are they going to deal with KYC and AML? I assume they've thought about those things and they'll have answers. The thing that we may see from Congress is really pressing them on what is really your purpose here? What is really the use case? You've said all this stuff about serving the non-bank. There'll be a lot of skepticism in Congress about that, I think, and they'll get pressed on that. And, and some congressmen may go down the path of, well, if your goal is really to serve the unbanked, are you just a payments system? I mean, what we heard, for example, from the CEO of Tala yesterday was the unbanked need credit. They need liquidity. So are you going to do that? Are you going to pay interest on their accounts? And therefore, is Calibra a bank? And therefore, is Facebook a bank holding company? So I can't predict where it all ends up, but it should be very interesting.
Do you think they'll pull it off, though? Do you think they'll launch?
I don't know.
Fair enough. Perry Ann, you run the Digital Chamber of Commerce there. I'm not a DC guy, but my understanding is different industries have their kind of, people in their lobbies to kind of push Congress or the agencies to do whatever. But crypto's kind of new to town. Do they have a hope? What's the political scene look like?
I call us the underdog because there's very powerful interest throughout Washington, and we are a tiny industry. July 16th is going to be a fascinating week in Washington. All eyes will be on this Senate hearing on Facebook. And just by luck of the draw, the Chamber is also hosting Congressional Blockchain Education Day that same week. And we already have over 70 companies from around the country coming to Washington to meet with congressional representatives and committees to educate them about what their businesses are doing in their jurisdictions and in their districts. So right now, I would say the general sentiment in Washington is very much enforcement focused. There's a hyper focus on finding the bad actors and getting rid of them. And there's very little conversation about the true benefits and the potential of this technology. And that's a big part of the narrative that we're driving at the Chamber of Digital Commerce, is helping bring balance. Yes, of course, we need to address enforcement and to make sure we don't have fraud and criminals abusing this technology for nefarious purposes, but we also need to appreciate what this could potentially bring to the United States economy, to our national security, to our government, to society, and create an inviting environment for companies to innovate.
Do you have any allies out there on the political side, people who are sort of, aware and go to bat for you? For instance, like do you think Donald Trump knows what cryptocurrency is?
There's definitely lots of people within the White House who are very smart on this. For example, Mick Mulvaney, the chief of staff, he was the original founder of the Congressional Blockchain Caucus and is a big promoter and supporter of this technology. As I mentioned, we do have a Congressional Blockchain Caucus. We now have 4 co-chairs. It's bipartisan, so there is a group within Congress that is supportive of this technology. The CFTC has many supporters. Chairman Giancarlo has been an avid supporter of this technology. You have Hester Peirce over at the SEC, who's now crypto mama. So there are lots of bright spots, but overall, it's an incredibly complicated environment with many stakeholders. It's not very well organized or coordinated, and that's really the challenge that entrepreneurs and even large companies are having today, is navigating through that sea and really understanding what laws are going to apply to their products and services in this space to get to market in a compliant way.
And I want to stick with the political stuff just a bit longer. With the 2020 Dems, is there anyone in that field who might kind of carry the torch for crypto?
I don't think there's no political upside for anyone getting out and saying I'm all for Facebook, I'm all for the creation of this new currency, which is going to be a basket of other currencies and maybe take the place of the dollar in some respects, or take the place of the payment system we have. I don't see the White House getting involved in this. The Treasury Department has not wanted to lean into this. I urge them to, take an interest and come out with a report on how we need to fix regulation. And there's no political upside for Donald Trump to do this.
Well, it shouldn't be a political issue. This is about technology. It's about
No,
jobs,
but I'm just saying there's no
innovation.
political upside, and I don't see them from a substantive standpoint wanting to get involved.
But we should also, the government should just come out and say that, and that's a big thing that we're advocating for. We would like to see the government issue a clear statement of support saying blockchain is an important technology, and we want companies to develop and innovate it on this technology here in the United States, and it should not be politicized. Again, this is about jobs, it's about technology, it's about the economy, it's about national security, and we should keep politics out of it.
Sounds good. Adam, I want to bring you into this. You're a longtime Coinbase executive engineer. You're now at the New York Stock Exchange with Bakkt. Can you just give us a quick idea what it is you do and what Bakkt does?
Yeah, Bakkt is on this point of kind of patchwork environment of kind of regulation. Bakkt is ideally here to bring kind of end-to-end regulated price discovery to crypto assets. And what we're doing is, by pulling it into a physically delivered future, we have regulated custody, we have regulated exchange, and regulated clearinghouse. And the idea there is that will bring with it capital, interest that's been sitting on the sidelines waiting for that kind of complete regulated construct. And going back to the Libra point, regardless of how the product is successful or not, what I do think it will be looked at is a form of a catalyst that's forced regulators to confront a lot of difficult questions, a lot of kind of maybe incoherent or incompatible regulatory opinions. And what we're going to see come from that is a lot of, I think, hopefully great debate. And if ICE, a $47 billion publicly traded company, the challenges we felt going through the regulatory process, I imagine what it must be like for smaller cryptocurrency companies trying to go through it. And my hope is that by Bakkt helping kind of set the example and seeing initiatives like Libra, we're going to start to get into an environment where we can grow technology companies here inside the US and not see them go offshore to try to capture that regulatory arbitrage.
Can I just say, Libra is sucking all the oxygen up, but actually what Bakkt is doing is very interesting. because even though we've had Bitcoin futures now for some time, CME has offered them, CBOT did, and now they've stopped. They're going to offer a one-day future that is physically settled. Now, one-day futures don't really exist, right? Futures normally have a longer period, like a month. So they've come up with this little device here of a one-day future that is physically settled, which effectively creates a cash market with end-of-day settlement. And as Adam has pointed out, it's within a regulatory framework. We've had a regulatory framework for cryptocurrency derivatives. Since I was there, we declared cryptocurrencies commodities. So what does that do to the trading of cryptocurrencies? It'll be very interesting to watch.
Well, for me, from a distance, I remember the news of Bakkt came out and made a big splash. Sean Tully wrote a big piece in Fortune. It sounded like they were going to work with Starbucks to offer crypto payments. It seemed really ambitious. And now, like over a year later, this seems not unimportant, but marginal compared to the bigger plan of offering like a few futures products. And as far as I can read, it's basically the regulation has held them back and kind of forced them into this box. Is that fair, Adam?
I would take a slightly different approach. I think what's unique about Bakkt is we're not focused just on trading and speculation, and we're not focused just on utility. We recognize you need both hand in hand. And when you look back to the kind of origins of intercontinental exchange, they don't create derivative markets just for the pure sake of speculation. They do it for actual utility. So whether it's an oil producer looking to lay off risk or manage that process, we're trying to do the exact same thing for crypto assets. So by coming out with both a daily and a monthly physically delivered future that's going to be margined, it's going to trade in the exact same exchange and clearinghouse that all of ICE products do. We think we're going to bring not just that efficient price discovery, but be able to support products that actually help solve real problems for real people.
And this is an industry where we've recently had a report from a proponent of the industry saying 90% of the volume on the exchanges is fake. Right?
I think it was 85, but...
So now they're, 85, okay. But then two of the ones they thought were good then got hacked and investigated. So now they're going to say, come here. Sure, you can't settle till the end of the day, but it's subject to this whole framework of regulation.
And I think the key piece here is our product's physically delivered. That means when that contract expires, when it comes to delivery, there's actually Bitcoin or a crypto asset that's going to be exchanged from one party to the other. There are already futures out there. CME's futures product, which actually has the highest open interest as a record yesterday. And interestingly, I think CBO's contract just expired yesterday. They're not moving it forward. Both of those products are cash settled, so they rely on an index price from these unregulated spot markets. And while it's been a great step forward for the industry, we're seeing kind of continued institutional interest. It's our hope that by bringing this end-to-end regulated, physically delivered product to the market, that we're going to kind of propel us into that next level of market maturity.
This still just feels so slow compared to what's happening go ahead.
Yeah, I mean, you guys have been waiting for 18 plus months?
Well, so we put out a blog post about this.
Regulated industry.
This process is not easy, fast, or without considerable cost. And what I really like about Bakkt is we have a vision that this is a marathon, not a sprint. While we have to operate at a sprint-like pace, we are a startup, we are a cryptocurrency custodian at our core. We recognize this stuff does not happen overnight, and that it's more important that we do it in a compliant way, in a regulated way, not just here in the US, but internationally. And that process takes time, but I think we've been working very constructively with regulators and have a pretty good experience.
We had some crossfire over breakfast and lunch. You were there for both, Timothy. And a couple points people made, and I think there's something to it, is that we used to come to blockchain discussions and talk about tech and building. Now we're talking about regulation. And then also, people are like, look, Switzerland is, the haven for Facebook. Asia is really building it. If the US is not careful, they'll lose out. I mean, America built the internet. A lot of the biggest internet companies are here. That's accrued immense strategic benefit to the US. If blockchain has the potential to be that big, or could this be a fatal mistake?
Well, I think you got to drill down a little bit on those statements. I mean, first of all, and I think also the industry needs to look at itself in the mirror, right? Again, this is an industry where 75% of the ICOs failed, or so, where a lot of the volume now is presumed to be fake, where there have been repeated hacks and problems. So there have been some problems here. As to whether we're losing, the lead, let's remember when Jay Clayton then went after ICOs, venture capital financing into blockchain increased dramatically. And if you're Jay Clayton and you have a budget that was barely increased over the last 5 years, and you're responsible for $34 trillion U.S. equity market plus a lot of other things, and there's this $300 billion cryptocurrency market in which you see a lot of fraud, to the extent you have resources to devote to it, you're going to go after the fraud. You're not going to shift a lot of resources over to deal with, exactly how should broker-dealers and cryptocurrencies be regulated and so forth, which I agree are issues that need to be addressed. But, the fact is Congress has not provided an overarching framework, nor have they increased the resources for any agency to deal with these things.
Well, Perry, what do you think? Is the U.S. blowing it, or?
We're quickly falling behind, and I think this should be a national priority in the United States of America. Many developed nations are taking proactive steps to create an inviting environment for companies to innovate and build on blockchain technologies within their jurisdiction. And in the United States, we're doing the exact opposite. We're telling companies to stop innovating until they can get their arms around it or hold a hearing. For us, we believe that there should be a coordinated approach, this should be a priority, and we should have a national strategy on how we're going to adopt this technology. That should, of course, include enforcement. We're not saying there shouldn't be enforcement, but we also have to look at this holistically, and blockchain does not just cross financial services. This is going to touch many different areas of the economy, from intellectual property, from trading, supply chain, media, and publishing. It's not just finance, and we have to be looking at this from a macro perspective.
But there are a lot of those things happening in the U.S. I mean, we just heard Marie from IBM talking about all the projects they've got going on in blockchain. We just heard JP Morgan talking about their projects. And obviously, it's Facebook that's sponsoring Libra, not one of the big banks in China or Credit Suisse or someone abroad. So I think you have to separate what's happening generally in blockchain, where I think there is still a lot of money pouring into it and a lot of people looking for good ideas that really have utility, versus the immediate issues we might have with fraud and problems in the trading of cryptocurrencies.
Adam, take us a little bit inside Bakkt to Coinbase in terms of, you're an engineer by training, right? How much of your time are you spending building versus dealing with compliance and regulation stuff?
Yes, I'll talk about my last about 8 months or so at Bakkt, and what's important to me is that from the ground up, Bakkt developed effectively crypto custodian. And by safely securing and storing people's digital assets, we're able to then facilitate this future on the futures exchange and so on. The technology is only one piece, and we had this conversation over lunch where, I think many in this room and tuning in, sometimes we think maybe a bit too technology first. And the challenge there is regulation, compliance, maybe even product market fit becomes an afterthought. And a lot of what we're trying to do at Bakkt is saying that technology has to grow hand in hand with how we approach regulators, and not just at the end of a product being developed, throw an application over the fence, but partner, educate, advocate throughout that process. And I think a lot of the work that the Chamber is doing is helping support that type of endeavor.
I definitely have more questions, but as always, love to throw it open to the room. If you know how it works, put your hand up and someone with the paddle will run to you. All right, well, sit and think up a really great question. Tim, I'd like to go back to you in terms of, it seems you have all these agencies, then you've got like the state of New York and Congress and the whole bit. Do we need like a new agency, or will that just be adding more bureaucracy to?
No, you're right that a lot of our issue is we have a fragmented regulatory system. So there isn't anyone. We don't have a unitary regulator like Switzerland has. There isn't any regulator who can look at this and say, you know what, I recognize this is an entirely new asset class from a financial point of view, plus it actually goes beyond finance, so I'm going to articulate rules that make it very clear that if you're, a utility token means X, Y, and Z, and if you're a utility token, you're not subject to financial regulation, and if you're a cryptocurrency, that's still a little different than, a security that really has to comply with securities offerings rules. It's very difficult in our system for anyone to do that. That would require Congress to do that. Plus, you're right, we have states doing various things. I've called for, a more comprehensive approach by Congress. I think that's what we need, which I think would help innovation. But again, whether we get that, we have a Congress that can't pass a budget, so.
I don't know if that's an option right now.
Yeah, love to sneak in a quick question from the audience. Matt, did you have a question?
Hi, it's Matt. Oh, sorry. Hi, it's Matt Heimer from Fortune. Perian, you mentioned that there are other developed nations that are developing kind of a friendly regulatory framework of the kind that it seems like you would advocate. Can you elaborate a little bit on an example of that and what it looks like and what it has that you'd like to see the United States emulate?
Yeah, it's a great question, and because the United States is so complicated and fragmented, as Tim mentioned, there's not really another country's model that I would take and import into the United States. I think we have to build something that's unique to our structure. But some other countries that are really looking and taking blockchain very seriously include the European Union. They have a very comprehensive plan and strategy that they're well along their way of promoting. They've created this blockchain observatory and forum, and I discussed this at lunch today, but the front page of that forum's website says this was created to cement the European Union's position as the global leader in this industry. Also look at what China is doing, a very different strategy, but they have made this a part of their 13th five-year plan.
But you didn't add at the lunch, someone said that Europe also gave us a GDPR, and China is perfecting authoritarian surveillance with blockchain. So.
Yeah, they all have their own flair.
And I think you got to drill down even on those things as to how much of them are PR in some cases versus really substantive.
Yeah. Alas, we're out of time. What's that big date we want to look for?
July 18th, Congressional Blockchain Education Day.
Okay, well thanks very much, Perian and Tim and Adam.